Hello and welcome to Commodity Culture, where we break down the commodity space for both new and experienced investors. Today we're doing another deep dive into a uranium company, and that's Uranium. Uranium has a market cap of approximately $267 million, trades on the Toronto Stock Exchange in Canada and NYSE American in the United States. Please note all figures listed here will be in US dollars unless otherwise noted. And before we get started, standard disclaimer, none of this is investment advice. Do your own due diligence, and as of the recording of this video, I do not own any shares in Uranium. Before we dive into the numbers, I'd like to speak a little on Wyoming, which is the jurisdiction that both of Uranium's main projects are located in. Wyoming is an extremely mining-friendly jurisdiction of all commodities. Coal mining still going on there, oil and gas. They are open to mining, and I think that is a huge advantage. The state also has no corporate income tax, which is also a big advantage. And politically, right now, even to this day, I believe their senator is very pro-mining. So it's a great jurisdiction, potentially the best jurisdiction in all of North America if you're a mining company. Uranium has two projects, Lost Creek and Shirley Basin. Both of them are in situ recovery operations, and both, as I said, located in Wyoming. Let's dive into Lost Creek first. Lost Creek is actually producing uranium right now as we speak. It has been in production since August of 2015. Now, they are producing a very small amount of uranium at the moment. It's not even worth mentioning the number. I don't believe they've released it, but that mine has been in operation, has produced 2.7 million pounds, I believe. I don't know if that's since 2015 or if that's more recently, but it shows that they are able to go into production. They have an operating mine, and they can ramp up once the price of uranium becomes more attractive for them to do so. Both Lost Creek and Shirley Basin have preliminary economic assessments that were released December 31st of 2021. So as of the recording of this video, that's about 8 months ago. So I believe that's great in terms of the timing. We're not looking at something that's too far in the past, but I do want to, of course, note that a PEA is less accurate than a pre-feasibility study, which is less accurate than a full feasibility study. So keep that in mind when you're listening to these numbers. Lost Creek has 11.9 million pounds of measured and indicated uranium in the ground at a grade of 0.046% on average. Now that sounds really low because we've recently been talking about Denison Mines. We've talked about NextGen. And when you look at the grade of uranium in the Athabasca Basin, it is just sky high compared to anywhere else in the world. So 0.046 is actually still decent. When we look at the average uranium grade in the world, different sources say different things. The World Nuclear Association says it's around 0.035%, so this would be above that world average. Azincourt Energy on their website says it's 0.2%. And then when we look at the Athabasca Basin, the average grade is approximately 2%, which is absolutely insane. And you see things like, ISO Energy's Hurricane deposit that has over 70%. U308 in one particular area. We're very, very high grades overall. So do not hold that against Uranium. It seems shocking when you look at 0.046% when we've been talking about Denison Mines and talking about NextGen, but that's actually decent and could be a little bit above the world average as well. So full annual production, once they get there, will be 1 million pounds per year. They're actually hoping to ramp up there within 6 to 8 months, and it could even be shorter. So this is incredible. They're producing, and they have the ability to ramp up if given the incentive to do so pretty much right away. So that is a massive advantage. They can sell into contracts quickly. They can potentially sell uranium to the US government as they're starting this new strategic reserve, something we're going to be talking about a little bit later. But the ability to ramp up at a moment's notice is excellent. So let's dive into the net present value and internal rate of return now. The base price for uranium here is assumed at a variable price per pound for the life of the property, ranging from $50.80 to $66.04 per pound, which is the base case that they're using for uranium price when they come up with these numbers. I think That's a great base. We're already around 50 in terms of the spot price, and $66 per pound. I mean, I think potentially by the end of this year, we're going to see that in the spot price as well. And in terms of long-term contracts, I think those are reasonable numbers to be looking at. So with that in mind, the after-tax net present value is $156.8 million. That is applying an 8% discount rate. And the after-tax internal rate of return is 66.8%, which is absolutely fantastic. The life of mine operating costs, as I mentioned, is all in is around $33 a pound. The PEA says $33.61 per pound of U3O8 produced. So that seems great. Extraordinarily robust economics here. When we're looking at this from an economic standpoint and nothing else, it is a clear winner. Lost Creek is also licensed to produce 1.2 million pounds a year. And as I mentioned, when it's in full-scale production, they're looking to produce around 1 million pounds when they fully ramp up. So that's perfect. Let us now take a look at Shirley Basin, which can also go into production quite quickly. Not as quickly as Lost Creek, but 15 to 18 months to build out, ramp up, and bring online to the max capacity of 1 million pounds a year. That's according to John Cash, the CEO. So that sounds great. All the infrastructure's there, the roads, power, waste disposal. It's not currently producing like Lost Creek, but it can be ramped up fairly quickly. And we're looking at 8.8 million pounds of measured and indicated uranium at an average grade of 0.23% U3O8, which is great. Again, this isn't the Athabasca Basin. We have to temper our expectations. The cost of production here, much like Lost Creek, is 33 pounds all in. And let's now take a look at the NPV and the IRR. Now, the sale price is a little different in the PEA for Shirley Basin. It's again a variable price per pound for the life of the project, and it ranges from $61.68 to $66.04 per pound. I think we believe it's all going to get there. And when we keep that in mind, these are, by the way, before tax numbers. I could not find after tax numbers in the Shirley Basin PEA. I don't know why. Maybe I missed it. But nonetheless, keep in mind these are pre-tax numbers. So NPV of $129.7 million. This is applying an 8% discount rate and an internal rate of return of 105.6%. I think part of that is because this is a shallow deposit, so it's very easily mined. And of course, they're using ISR, which is a lower cost mining methodology. So those are incredible numbers. Post-tax, look, anything over 30% in an IRR is quite impressive. So when you get into the 100 plus percentile, that's knocking it out of the park. So even post-tax, if that number gets knocked down a chunk, it's still going to be extremely good. Another great thing here is that the Lost Creek property has a uranium mill on site. So this mill is licensed for 2.2 million pounds of production per year, which is exactly the full-scale production of both Lost Creek and Shirley Basin combined. So they basically have a mill close to their Lost Creek mine, which they can transport ore to. I believe Shirley Basin is not too far from Lost Creek. I don't remember the exact number, but I know that between the two, it's easy access. There's a 2-lane highway and then a bit of dirt road between the two. So you're looking at the ability to also easily transport ore from Shirley Basin to the Lost Creek mill, process it on site. It's a beautiful thing. Energy also has around 284,000 pounds of physical uranium on the balance sheet. I love this. It's not as much as Denison Mines has, and some of these other companies too, but it's nice to have that buffer. It's nice to have those pounds, which you can hold on to. They can be used as collateral for financings. It's only going to appreciate in value versus cash. I always talk about that. I love to see pounds and cash on the balance sheet, but I like pounds a lot because, as we all know, cash, especially these days, is getting eaten away by inflation at quite a higher rate than average. So when you have physical uranium instead, you're looking at what I believe will be an appreciating price as time goes by. And speaking of cash, Energy has around $45 million of cash on the balance sheet, which is a very healthy number. I believe that is enough to bring both Lost Creek and Shirley Basin into production. So I don't know that they're going to need to do financing to get there. I believe they have an ATM facility which they can use as well, but they haven't used it too much recently. So if they need to raise cash, I believe they can without a problem, but $45 million should at least come close to covering the ramp up for both properties. So what price per pound is it going to take for them to fully ramp up production at both properties? Well, John Cash, the CEO, has been a bit opaque about it because he doesn't want to play his hand when it comes to letting other companies know when they're planning to go into production. But reading between the lines, it seems like it's about $60 to $65 a pound, and I think that's going to happen for sure. I also want to make a note here about the U.S. Strategic Uranium Reserve. This is a newer initiative where the U.S. is looking to buy pounds to fill up uranium reserves, and those pounds, of course, they want them to come from local producers. When we look at the uranium on the balance sheet, the physical uranium that Energy has, it's all produced in America. Most of it's produced at Lost Creek, but it's all U.S. sourced, so that's an initial inventory they could sell into this strategic reserve if the price made sense. And depending on how much the U.S. is willing to pay for these pounds, they could also ramp up production further to meet those needs. Now, the great thing about this is Energy is one of the few producers in the United States that could very quickly put pounds into this strategic reserve. There's a few others. UEC, I believe, could. Energy Fuels, I believe, could. And Energy. And I'm not sure if there's anyone else that could do that. So that gives them kind of a first mover advantage if indeed the government comes to them or they go to the government and do a deal for the strategic uranium reserve. John Cash has also stated that the company has been in frequent talks with U.S. utilities who are looking for locally produced pounds. This makes sense given the Russia-Ukraine conflict. I think this is a real thing. I initially thought it might just be background noise, but it does seem, particularly in the United States, that utilities are taking the idea of sourcing local uranium seriously. So that is good news, and that also plays into Energy's hand in the way that they can ramp up production quickly if they get the right price for a long-term contract from utilities. So as of the recording of this video, I don't believe anything is actually signed, at least that we know of, but it's good to know that they are in talks with utilities, and I think that bodes well for them. So Energy also has some other projects, a Lost Soldier project in Wyoming. They have 105 unpatented mining claims totaling approximately 1,925 mineral acres. I believe that is a historic area for uranium mining, or at least they've done some drilling there that has shown promising results. So that is more of an exploration play. Great, not something I really think about, but it's there. Lucky McMine site in Wyoming. Again, all of these are in Wyoming. Super friendly mining jurisdiction, as I mentioned at the top of the program. So a great place to have properties. So the Lucky McMine site in Wyoming has historically produced over 46 million pounds of uranium from the 1960s through the 1990s. So, when we look at properties that could potentially have uranium, ones that historically produce tend to be very promising, so we'll keep following that. And interestingly, they have a gold exploration project in Nevada called the Excel Gold Project. I haven't looked too deep into it. I don't think the company has released a ton of information, at least on their website, about it. But they've got a gold exploration property in Nevada. I don't know of any other uranium mining company that has exposure to gold. I doubt this is going to be ramped up at any time soon in terms of really pushing it forward, but it's nice to know they have that, so they have some exposure to gold as well. When it comes to issues or things that make me hesitant, it's pretty tough to find anything with Energy, I'll be honest, aside from the standard things that could plague any mining company in these times. Insider ownership is one issue. We're looking at, by estimates, an insider ownership between 1.5 and 3%. I believe the former CEO holds the most shares in terms of insiders, but of course he's no longer the CEO. So we always want to see that number up as investors. We want to see more skin in the game. I personally would like to see at least 5%. So we'll keep following that. I don't think it's a huge issue compared to some other companies I've covered. The other issue, I guess, is the new CEO, John Cash. Jeff Klenda, the ex-CEO, a lot of people liked him, very experienced, very skilled. So, John Cash is unproven. He came, at least as a CEO role of Energy, because he came into the job this year here in 2022. However, he has close to 30 years of experience in the uranium industry, including serving as the president of the Uranium Producers of America, along with a whole bunch of other stuff. And I know CEO interviews aren't the best place to get to know what a CEO is like, but the interviews I've watched with him, he seems like a very straight shooter, very non-promotional. He's not over the top. There's some CEOs that really, every time they speak, it's the same tagline. It's this, it's that. It's very markety, if that makes sense. It's like you're listening to an advertisement. John Cash is not like that at all. He shoots straight and he tells it like it is. And I think time will tell, but I think he'll be a great captain steering the ship. And then, of course, the same problems, like I said, that face every mining company these days. Inflation rising, supply chain issues, so you're not able to get all the equipment or supplies that you need potentially. John Cash has stated that Energy is trying to get ahead of this by buying any supplies or equipment they need well in advance if they determine that it could be difficult to get. So that is good news. And besides that, I don't have a lot of other bearish things to say about Energy, so I would really appreciate anybody out there who knows the company better than me to go ahead and drop a comment below and let us know any bearish scenarios or downsides that you see in Energy. All right, guys, that's it for me. Thank you for joining the program. I hope this has been useful for you. I try to make these videos as kind of a launching point for your own due diligence into a company, so you can kind of get the rundown. If you like what you hear, then you can go ahead and dig deeper yourself. So I hope these videos are assisting you with that. And if they are, please do like, subscribe, and hit the bell notification so you're always alerted to these analysis coming out of uranium companies. I also do interviews every week on Wednesday where I frequently talk about uranium as well as precious metals with some incredible guests. So join us, and I'll see you guys next time. Commodity Culture is a series on commodities and natural resources. If you would like to see more, be sure to subscribe and hit the bell notification so you're always up to date with the latest episodes.